US's highly fragmented markets, approximately a dozen exchanges, such as the New York Stock Exchange, NASDAQ, and BATS, compete with more than 40 dark pools, which include the likes of Credit Suisse's Crossfinder and Goldman Sachs' SigmaX for trades in the same security. Dark pools, which operate much like traditional exchanges with the additional feature of pre-trade opacity, have grown rapidly in recent years, both in the US and in many other countries. One concern is that dark pools have achieved this rapid growth in part through more favourable regulatory treatment. In the US, exchanges are prohibited from accepting or displaying orders at price increments of less than 1 penny if the price of the security is $1 or more. When quotes on the exchanges are constrained because there is only a 1 penny difference between the price at which traders are willing to buy and the price at which they are willing to sell, additional trading interest is reflected in a build-up of depth. So what do dark pools offer? In a dark pool, traders can trade ahead of these queues by trading at the same price or at a slightly better price, that is, provide price improvement. As more and more traders send their orders to the dark pool to bypass the lit market order book, the probability of subsequent order execution rises in these dark pools. One implication is that price discovery is taking place in dark pools when order books on lit exchanges are tick size constrained. Over time, the ability to queue jump on some dark venues can discourage traders from providing liquidity to traditional lit order books, resulting in wider spreads and less depth. The findings of this study lend support to the introduction of a trade-out rule being debated by the SEC, which requires dark orders to be routed to lit exchanges unless dark pools can provide meaningful price improvement. Similar regulation has been in place in Canada and Australia, which prohibits trading in the dark unless traders provide a minimum level of price improvement. This has reduced the amount of dark trading on these exchanges without corresponding reductions in the quality of the dark or lit markets. The results of this work are profiled in another of our videos. After the introduction of minimum price improvement rules in Australia in May 2013, we see a sharp drop in the dark pool market share of both Chi-X and ASX and a corresponding gain in ASX lit market share. This provides evidence that removing the regulatory advantage to dark pools appears to curb the growth of dark trading. The results also suggest there has been no change to the fairness or efficiency of either dark or lit markets. Similar results are available in Canada.